morning. Happy 2026. As I like to say, 2026, you will be, I will be, everybody will be in the mix. It is so exciting to be back in front of you guys. Like, it just warms my heart, even digitally, to see you guys popping up and joining us for another fantastic year of Dealmaker DFW. This year, we promise some of the most exciting speakers, some of the highest engagement, and most importantly, we're going to put a little ducats in your pocket this year. We're going to make some connections. No, you're going to make some connections that, as I like to say, when you see me in person, you can shake a hand, make it grand. I want to start off by giving you guys, so we're doing this digitally, and I think there's a lot that comes from the digital atmosphere that we're in nowadays. Everybody's so hyper connected. And as a guy that has, and this is a true story, Felipe, I have 3 cell phones. As a guy that has 3 cell phones, 9 social media accounts, 2 kids, a dog, and cable that doesn't work all the time, I think it's so imperative that we understand what digital brings to us. Did you guys know that the average person touches their phone over 2,600 times in a day?
Geraldine is double that, I guarantee you. Maybe triple.
So here's the high end. So this would be Geraldine, a power user who touches their phone over 5,000 times in one day.
Wow. That's insane.
That is unbelievably insane and believably probably true. So that goes to the top of the spear of what I'm saying is we're so digitally connected that we want to use these opportunities to make sure that we empower ourselves to connect, grow, and enhance our businesses. So tonight, first one on deck, we've got a fantastic show for you guys tonight. We have a powerful speaker. We have some breakout sessions. We have some announcements. We've got some great partners that are here with us. So we want to get this show on the road. We're going to keep a tight ship. No sinking, no Titanic here, baby. We're all rolling uphill, roller skates on. We want to start tonight off with some announcements. Let's get some announcements out of the way so you guys tune in, lock in, and before we go, it is imperative. Geraldine and do I introduce you guys now?
Yeah, let's do it. Welcome in, everybody. Glad you're on the call. Let's get on with it.
Ladies and gentlemen, for those of you that are joining us for the first time, the head honchos of Dealmaker DFW, we have Geraldine and Felipe. They have done a fantastic job of keeping us connected and tugging and digging in and making sure that we connect at the highest level. So they will be our co-hosts. I am their co-host. Let me straighten that out. I am their co-host tonight. I am on the digital microphone, and you guys can't see him, but back there pushing all the buttons like he's playing Pac-Man is our guy Urish. He'll keep us timely and in line. So Felipe, take it over. Let's get on to some announcements.
Let's do it. Welcome in, everybody. Good evening. I am so glad you are here. Bear with us. This is our first time going virtual. We got the in-person meetup down, but we're having a couple of technical issues this evening that I'm working through it, but we'll be all right. I want to welcome my beautiful wife as well. Go ahead and say hi to them, babe.
Hi, guys. Welcome. Thank you so much for being here. If you've been to our in-person meetups, thank you so much for making it back to our virtual meetup. This is exciting, guys. We took a little bit of a break, but we are so excited to be here with you guys and just to kick off 2026, just running, right? We're running this year.
That's right. Can you guys see my screen okay?
Yes, we can.
Okay, awesome. And then we have the chat going. I'm going to fix my presentation because it's all over the place. But we have a couple things here for you just right off the bat. There's going to be QR code galore on this webinar. So don't put your phone down. There's going to be lots of scanning because we have lots of goodies and lots of resources for you guys. But we have a brand new website that if you go to Dealmaker DFW, you can access, and I'll show you what that looks like live.
That is a fantastic website. I love the update on the website. For those of you that previously were on the website, and you haven't seen the update, take a gander. It's really well done. It's really well put together. There's a lot of info on there for you guys to surf the internet.
It
Yes,
is.
sir. Okay, so if you go to Dealmaker DFW, we have a Dealmaker Corner that is live and open. This is a virtual bulletin board. If you have any wants and needs, if you have any deals, if you're looking for capital, if you're looking for anything, make sure you scan the code, or you just go to Dealmaker DFW and you find resources. You go under the Dealmaker Corner and you can post anything you want in there. We also have an interactive chat. Once we get the Q&A going, you guys are open to partake. We have a newsletter that you can sign up for, and this is gonna come out bi-weekly. Second and fourth Friday is gonna give you some market update, see what's going on in our industry. So take advantage of that. We also have a real-time data on interest rates, Fed rates, all that good stuff, and housing is specific in DFW. So make sure you check that out. It's top tier data. And lastly, we have the tools of the trade on our website. And these are all resources that we use day in and day out. Anywhere from cash buyers to, CRM, all sorts of resources. We have it in there. So make sure you check that out. Okay, so that's what I wanted to share with you. And let's get back.
There's so much on there.
It is a wealth of knowledge. It absolutely. And Felipe, I think I saw on there, is there an app coming with that soon?
Yeah, it works on mobile now, but we're gonna have on the App Store that you can download on iOS or on Android. You're welcome to do that, and it works simultaneous on the website and on the app.
Love that. I think that is, for those that are constantly on the run, being able to click on the link and get data and information at the top of their fingertips. That is fantastic.
Yeah. But let's get our sponsors. Let's give a big shout out to our sponsors. We have a great presentation tonight, guys. You're gonna be blown away. It's a topic that I love, but I want to give a shout out to our sponsors here on our website. If it wasn't for them, this wouldn't be possible. So I'm very, very thankful. And let's see if we have a couple of them in the room so we can bring them in and let them know what they do. Let's see here. If you are a sponsor with us, will you raise your hand so we can get you and we can get the floor to you? Oh, we got Tommy on the line. Let's get Tommy in, and Aaron. Yuresh, can you go ahead and let them in? And we're going to go 60 seconds each person. All right.
It's always having our sponsors and our partners on joining us. It just enhances the opportunity for potential other partners of theirs to get that one-on-one time with them and allow them to, probe them for questions as well. So you guys don't miss the opportunity to partner and sponsor with us as well. All right, so I'll start off. Since Thomas, you jumped on first, you get to sit in the front of the classroom. The song say you got to hit them with the flex. How about you give us 60 seconds and tell us, start off with, preschool, tell us your name, your grade, your favorite subject. I'm kidding. Tell us your name, tell us about your product, tell us what 2025 was for you, and give us something exciting in 26. So your name, your product, what was 25, and give us something hot in 26.
All right, well, perfect. Can y'all hear me pretty good?
Yes, sir.
All right. Well, first of all, I want to tell Felipe, thank you for putting this together, and thank you for allowing me to come on here. Big Tex, I love your name. Can't wait to meet you in person, and excited about what y'all are doing here, and glad to be a part of it. So my name is Thomas Gartside. My sister and I, Diane Fitz, she might be jumping on. We got a lot of little kids. I got four boys. The oldest is 8. The youngest is 2. And my sister, she's got 3 kids. The oldest is almost 8, and the youngest is 3. Actually, she's on. She said she's on. So, but 2025 was great. Came off the hardest and toughest year ever in 2024 for insurance. So, what my sister and I do, we have insurance brokerage with Goosehead Insurance. We've been there for 10 years. We're about to re-up our contract with Goosehead. And so 2024 was the toughest year ever for insurance. And I've been selling insurance, I think, 16 years now. And it was very tough. Now, 2025, carriers started coming back. They wanted to grow. And so we got to see a very turned market from the worst market ever to, okay, we're getting back to normal. In 2026, we're seeing that, carriers are wanting to grow again. So carriers are being more aggressive, more competitive, and it's exciting. So it's going to be a good time. You're muted, Tex.
I think the great part about what you're saying is, like, for you to have been in it, you would just say over 10 years. So you've seen the ebb and flow, and to just have that great, vision to know and to see what's already coming in 2026, especially with insurance. I think that's going to play a lot into people's thought processes as they start to process their business more. So thank you for that, Thomas.
Absolutely. Happy to be here, and thanks for allowing me. Felipe, I think my sister is on here somewhere. If you want her to jump on, say a word.
Yeah, absolutely.
If she can get on there. But I'm going to mute myself.
Sounds awesome, man. Thanks for sharing. And we'll drop your website also in the chat, so anybody that's interested can reach out and get a hold of you guys.
Hi, Diane.
Hi. Sorry, I couldn't figure out how to put the camera on and had a baby screaming at me, so it kind of worked out. But yes, I'm Diane, Tommy's sister. So thank you guys for having us. We're excited to be a part of it. This is Lena. This is my daughter.
Hi, Lena.
Yeah, you say hi? She's a little camera shy.
Definitely excited to have all of you guys, the whole clan, joining us on this journey this year as well. So thank you guys. As Felipe said, he'll put the information in the
Yeah, we'll drop it. Absolutely. Who else we got? Thank you, Diane. Nice to meet you.
Well, it looks like we have my favorite name. He probably gets this. Aaron, are you still there?
I am. Can you hear me?
Yes. So,
hey, how's it going?
Nice to meet you, man, and thank you for joining us tonight. We look forward to hearing what you have to say. My key and pale favorite joke, Aaron. So, why don't you take it away? Your camera's off, by the way. I don't know if you know that.
Oh,
It's on now.
mine's showing
I
up.
see you.
Oh, mine is off. Well, Aaron,
Yours is off.
drop a little bit for us. Tell us your name, your company. Tell us about 25
Absolutely.
and what you got in 26.
Yeah, absolutely. So I was at all of the live ones last year. So some of you might recognize me, fastscalability.com. We've been building systems for businesses for 8 years now. And we have a software company that allows us to put websites, forms, surveys, automation, text, email, WhatsApp, Instagram, Facebook messages, all of it all in one place, and then build automation behind it. So we've been primarily doing that. Last year, kind of leaned into the AI agents to help real estate agents turn leads into listings. And this year, we're moving into continuing to partner with Felipe and Geraldine and build this thing out. And we're moving into implementing the systems into the mission space, so the Christian mission space. We're using the business systems of the world to multiply missions around the world. So that's like our hard push in 2026 is moving into taking business into what God's called us to do and multiplying that around the world. That's the big exciting for us this year.
You can never go wrong when you're doing God's work there. I love that, Aaron. Thank you so much. And yes, we do remember your face.
And now you remember
forget, he's at everyone. He's an addict.
That's right. We at all of them.
Yes.
Always good having you, man. Thank you. Who else we got? Is Brandon on the line?
Brandon was on, but now he got kicked off, and so he's trying to get back on.
Okay, is Louise? I think Louise with Ranger Air was going to be in here as well. Anybody else? If you're a sponsor, make sure you raise your hand so we can get you. And then we're going to move right along to tonight's segments and topics. Anybody else?
I'll go while Brandon is trying to log
Oh, yeah. I almost forgot about you.
How could you?
I know. All right, go. Take it away, babe.
All right. So, yeah, I'm really happy you guys are all here. I'm really excited. This is exciting. So, in case you guys missed it earlier, I'm Geraldine. I'm Felipe's wife, and I am with Odyssey Soul Travel. So, Odyssey Soul Travel is a travel agency that creates bespoke travel experiences, whether that's a simple weekend getaway or a luxury vacation or a once-in-a-lifetime adventure. We handle all the nitty-gritty planning, all the details, and the strategy behind creating vacations. So our clients, all they have to do is just simply show up to their vacation and enjoy the journey. But what makes Odyssey Soul Travel so different is this. I'm also a travel business mentor. So I help people who love to travel, learn how to travel smarter, save significantly on their own trips, and even turn travel into an additional income stream without needing any prior experience. It's perfect for those who already invest in travel and want it to start giving something back, right? At the core of what I do is stewardship, guys. Helping people use their time, their resources, and their passions well. So whether you want unforgettable travel done for you, or you want to build a flexible travel business that fits your lifestyle, I help people turn travel from an expense into an opportunity. So if travel is something you already love and spend money on, and I'm pretty sure that you do, I'd love to connect with you and see how Odyssey Soul Travel can serve you. So thank you guys, and I hope I get to meet some of you afterwards, or if you have any questions, you can always find me online, and I'll attach my website in the chat. Thank you for being here, and I hope you guys enjoy the rest of the webinar.
Fantastic, Geraldine. Thank you,
Thank
guys.
you.
And thank you to all our other contributing sponsors and partners for tonight. We will put your information inside of the chat, and if any of you guys that are here want to connect with them, please use one of these 2,600 touches in your phone to connect with them. So let's continue on. So Felipe, it looks like we are we
let
at
me
the prize section?
Yeah, let me get Homero. Will you bring Homero on? He's a deal maker friend. He's part of the family. So let's give him the floor a little bit. Homero, can you jump in and tell us a little bit about your meetups here locally? Hey, Homero, can you hear me?
There you go. All right, perfect. I was trying to figure out how it all worked.
All right, my friend, welcome in. The floor is yours. Tell us a little bit about your meetup.
Awesome. Well, yeah, I'm really excited to hop on with the family again. I loved your in-person meetups in McKinney. So my name is Homero, along with a couple of friends. I run Real Estate Hecho Fácil, DFW, which is very similar to what Felipe does for the community, but we do it for the Hispanic community, right? So it's mostly all in Spanish. So we're going to have our in-live person event on January 27th. It's going to be at 6 p.m. in Plano. You can register at realestateHechoFácil.com. I put it in the chat, and we'd love to see everybody there. So all your contractors, all the people that are out there working hard that just want to understand how they can become a real estate investor, we're helping that community through different education, whether they want to buy rentals, fix and flips, becoming a note investor, or be a lender, whatever the case. We'd love to have everybody, and I'm excited to be part of this family. Thank you, Felipe. I'm excited.
Yes, sir. Thank you, man. Thank you for jumping on. All right, well, let's keep this thing moving. Let's get to some fun segments. I have some special things for you. Did I miss any Dealmaker family, or did I miss any sponsors at all?
It's just Brandon, but he's we'll have his QR code, because he's a sponsor, so we can have his information on the screen.
Is he having trouble logging in?
Mm-hmm. He is.
Okay. Let me play this from Investor Base, and then we'll resume everything.
Dealmaker DFW, what is up? This is Daniel McClam. I am one of the co-founders of InvestorBase, which is a brand new disposition software for wholesalers. Extremely excited to sponsor this event today. But InvestorBase, we give you access to an estimated 10 million investors nationwide, offer you free skip tracing for those buyers, and we identify the most likely buyers for your deal. So I'll show you real quick how that works. We'll jump in here. So we have this property in Pittman, Texas. We're going to put it on 3 miles 1 year, turn on skip trace and save. And within a matter of seconds, we produce essentially every single person that has done a fix and flip or bought a rental around this property that you're trying to sell. So we just produced 203 results for qualified buyers for this deal. And all of these are ranked from most likely to buy your deal at the top to least likely to buy your deal at the bottom. So we have a ton of cool features in here, but look forward to chatting with you and hopefully see you all on board. We have a special offer through Dealmaker DFW, and definitely chat with the team over there to figure out what that is. I'd love to have you on board. Thanks.
All right, guys. And I also have 2 more for you, and then we're going to move along.
What's going on, everyone? This is Matt Moore from Camaplan Self-Directed IRA, wishing you all a very happy April. April, of course, means tax filing deadline will soon be upon us on the 14th. So I'm sure everyone in the room is absolutely thrilled about that, right? But in all seriousness, you're all working hard to make your real estate deals work, and you're all looking forward to those nice returns. And I'm sure it pains you when you have to split some of that with Uncle Sam. So I want to encourage you to use the QR code on the screen to reach out to Camaplan to learn how you can use your self-directed IRA to invest in real estate and keep those returns for yourself. We can walk you through how the process works, and we can speak to you, your tax attorney, your CPA, whoever needs to be on the phone call to learn exactly how you can add this crucial tax saving strategy to your toolbox. So have a great meeting tonight, and we look forward to hearing from you.
All right, guys, Camaplan, they're a great self-directed IRA custodian. And then we have Giovanna on the line. Giovanna, you want to jump on real quick and talk to us? Is Joe with you? Make sure you raise your hand so Urash can unmute you.
We have Brandon as well. Yeah, can you hear
Hey
me?
guys, good evening.
Felipe, can you hear me?
Yeah, we
I can,
Brandon.
loud and
All right,
clear.
that's a start. All right, let me try to fix the camera. I'll circle back 1 second. Oh wait, here we go. Hold on. There we go. All right, yeah. So excuse the background. I got caught off guard here, so I made it back to the house just in time. I got the audience right here. You want me to wait? I just finally figured it out, so I'm here.
No, man, let's do it. Let's do it. And then, Giovanna, if you want to queue up, you go right after Brandon, and then we'll get started. Thanks for all your patience, guys.
Yeah, so some of y'all, I met a bunch of y'all last year during our in-person meetup, so I'm grateful for that. Welcome back, 2026. My name is Brandon Roberts. This is Brinley. I'm with Priority Roofing out of Dallas. Some of you may have seen me on Fox 4 News the other night. I was grateful for the opportunity, but nonetheless, I'm partnered up with Felipe and Geraldine so we can grow this network into people that we like and we want to do business with. Uh-oh, my daughter got me. There we go. Anyways, yes, grateful to be here. Sorry about the headache of getting on here, but got to figure it out.
Awesome, man. Thanks, Brandon. He's
Thanks,
with
Felipe.
Priority Roofing. So I'll drop your QR code and your website if anybody has any roofing needs. And then let's get Giovanna in, and then we have Bryan on deck right after that.
Hello?
Oh, there you are.
Oh, there you are. Hey guys, how are you? It's me and Joe are here.
Hey, what's up, fam? Happy New Year to everybody.
What's going on, guys? How are you? Tell us
Good.
what you do, what you guys be working on, and you're getting ready to relaunch here in the near future.
Yeah, so we run Nosotros, powered by Dealmaker in Atlanta, and we're opening up another branch in Fort Worth, Dallas, and so we're super excited. We're also hard money lenders nationwide, and just super excited to be on here with Felipe and Geraldine. We have an amazing relationship, and we're here to support as well, guys. So thank you very much for hosting this evening.
All right. Well, thanks for being here, guys. Appreciate you. Looking forward to seeing you guys soon.
Looking forward to a cold plunge.
I'm not looking forward to that, but I'll do it. All right. Well, I have my man, Bryan. He is a wealth of knowledge. He's going to go on about 8 to 10 minutes. He's going to tell us what is going on in the economy, what he's seen in the market, interest rates. Bryan, are you there? Take it away, sir.
Thank you, sir. Bryan Maddex with Bello Mortgage, powered by Coast to Coast Mortgage. I lend pretty nationally. And what I'm going to do for you guys is a quick market update. We're going to talk about where rates are, where they're going. We're going to talk about big picture housing markets and then some headlines that affect real estate investors. And if you see me on other places, sometimes you might see a slightly recycled information, but this should be pretty fresh. So we're going to start off with jobs. See if I can. Oh,
I made you a presenter, Bryan. That way you can share your screen. Let me know if that went through.
Yeah, can you stop sharing?
Yes, I can.
It's telling me I can't share while you share.
Bear with me while I figured this out. Then if you want to talk through it.
Okay. So yeah, we're going to start with jobs. If you go to the doctor, they're going to test your blood pressure. That's a leading indicator, right? If you've got problems, sometimes they can detect that in your blood pressure. And so we're going to look at jobs for the same reason. We're going to look at, let's see if this is going now. Not yet. Not yet.
We'll get it.
There we go. Okay, we are good to go. If you ever want to know anything about the market or any questions that are financial, you can type in your question and then follow it by Fred. Fred is the St. Louis Federal Reserve's website, and it controls or it hosts tons of data. So we're looking at jobs because this is going to be a leading indicator of what is happening in the environment. As borrowers, this sounds weird. I don't mean your family or your friends, But when we're borrowing, we want unemployment to go up. That is going to help mortgage rates out. So I'm not wishing death and destruction on the economy, but a little unemployment ain't so bad if you're borrowing money. So we're going to look at we're going to, over the time, we're going to continue to look at initial jobless claims. So these are people that just filed for unemployment. And we are not actually looking horrible. If you look past this last year, we only had 198,000 new people filing for unemployment. So that is not so bad. And then we want to look at continued claims. So this is people that are receiving unemployment. And this is a little bit of a liar report because most areas you can only receive unemployment for about 6 months. Some states a little longer, some states a little shorter. So some people do fall off of the continued claims or the continued unemployment. And this has been really high. You can see that we started off the year a little bit lower and we built up through the summer months. And right now it's down a little bit. And again, that could be a little bit misleading because we're kind of past the government layoffs. Oh, sorry? Oh, I thought I heard somebody talking. When we zoom out, we're going to see COVID up here. And then you can see 2022 was really low unemployment. We were in the 1.3 million, 1.4 million. And we're sitting right now almost at 2 million unemployed. It's like 1.8, 1.9 million. Most of this last year, we sat in that 1.9 million range. So when we look at unemployment, this last year, 2025, we only added about 48,000 jobs per month on average. And that is not great from post-COVID. And then it's also not great if you look pre-COVID. So this is just a very bad trend that the jobs market is softening. And that is what might lead the Fed to make some moves. So when we look at the Fed, they have two tasks. One is keep inflation low, and the other is to keep unemployment low. And they pick which of their tasks is the most important. And right now, when the Fed is lowering interest rates, they're saying unemployment is a bigger concern than inflation. But we're in a weird spot because inflation had been kind of going up throughout the year. This last part of the year, we saw inflation tick up, partly because of tariffs, partly because, well, we've got people spending money, and that is not good for mortgage rates. Inflation is going to rise mortgage rates, unemployment will lower it. So we have our next Fed meeting on January 28th, and right now there's a 95% chance that we are not going to see a rate cut. When we look further in the year, March, there's still an 80% chance that we do not cut rates. And then April, we've got a 67% chance to cut rates. So the farther out in the year we go, the more likely we are to see a Fed rate cut. And Fed rate cuts, the last 3 or 4 Fed rate cuts, we actually saw mortgage rates tick up a tiny bit right after the cut, but we saw rates improve about a week or 2 weeks prior to the rate cut. So we do want to pay attention to the Fed and what's happening. They don't directly affect mortgage rates, but that market data is what helps drive investors who are buying mortgage bonds. All right, today's mortgage rates, we're sitting at 6.4% on average nationwide for a conventional loan. FHA is looking pretty at 5.7. There is about a half a point benefit to a 15-year on owner-occupied deals. For investors, 15-year mortgages oftentimes are the same rates or could even be a little higher than a 30-year rate. So we don't do investor mortgages at 15 years very often. When we look at the markets, we're going to look at the 10-year Treasury. This is the easiest thing for you to watch. If the 10-year Treasury is going down, mortgage rates are probably getting better. And you can just Google US 10Y. We're sitting right now at 4.16. And on this chart, up means more expensive rates. We want to see this chart declining. So if we look back throughout the year, things were getting a little bit higher as the end of the year rounded out, but we ultimately ended the year lower than we started the year last year, and we started this year about 1% lower than last year. Rates were about 1% higher last year in the 7s, and right now we're in the low 6s. The mortgage-backed securities, this is the actual bond that trades on Wall Street. And on this chart, down means cheaper, more expensive, up means cheaper. So we want to see this rising. So this is a better trend for the end of the month. Rates were slowly getting better over time as we finished out the year, which is good news. When we look at the 10-year Treasury, Historically, we see about a 2% or 1.75% spread. So if you're looking at that 10-year treasury, it's 4.17. Mortgage rates right now are 6.04. So we've improved a tiny bit since December. We've come just under that 2% spread. So if you look at the 10-year treasury, you're at 2%. That's about where mortgage rates are for owner-occupied clients. And then investors, we usually pay about a 0.5 to 1% higher rate. I did a quick analysis on a 300,000 valued house doing a 75% cash out refinance. And I used a 740 credit score. This was live tonight. So we could do a 6.84% rate with a 5-year prepayment penalty if we do a cash out refinance up to 75% of the value of your home. If you pay 2 points, you're getting a 6.24% rate. That is not bad for an investor, especially when owner-occupied rates are at 6.04. So we can get investor rates by paying a couple points just over owner-occupied rates. Where are rates going? When we look at the projections from Fannie Mae, they think rates are going to stay right around the 6% mark all year and next year. The Mortgage Bankers Association actually thinks rates are going to tick up a little bit this year and then maybe kind of stay in that low to mid 6% range. And when we look across the different bodies that help predict rates, Redfin, Fannie Mae, Mortgage Bankers, low 6% range is predicted. So we're not predicting a great improvement to rates this year unless unemployment ticks up. One thing that's going to affect rates is Trump did just direct Fannie Mae and Freddie Mac to buy $200 billion in mortgage-backed securities. That should help push mortgage rates down. The day that announcement came up, we saw mortgage applications rise 28% just based on that news. So I'm going to fly through a couple slides real quick just to give you a kind of a market outlook on housing. And I probably won't get to all my slides because I went a little long in the beginning to help set up how we're going to do this. But this is showing a chart of active inventory from December 2019, so right before COVID until the end of last year. We have 17 markets that have more inventory right now than we did pre-COVID. Texas, you're sitting up in the 34%. It's one of the highest. I'm in North Carolina. We just switched. We were underneath that average for a little while. And then you've got a couple other markets that are sitting kind of high. If we look a 1-year look back, so over the last 12 months, this is an active inventory between December 24 and the end of last month. Texas actually kind of recovered a little bit. They're only 13% higher inventory. Florida really recovered. It was hurting a year ago when we looked at this chart. North Carolina is really leading the pack here. And then a little bit up here in the mid northeast area is kind of got a little bit more inventory than what we've seen. What we see in inventory as we're in January is we usually see inventory tick up, and throughout the summer, we see it cap for the number of active listings into July. So it is very normal right now for us to see inventory increase as we go into our very hot summer and spring season. And then in the winter is when we really see a drop off, and that's very consistent. Last year was very consistent with prior years to COVID, a little better than COVID, but prior to COVID, not quite as hot as post-COVID. And then the last thing I wanted to show you is what may come when we look at house values. So this is the 7 indications: Zillow, Case-Shiller, Freddie Mac, Cotality, ICE, and FHFA. They're all predicting mild improvements to house prices over the next 12 months, between basically staying flat to maybe a 1.8% increase in house values year over year. This has got 26 or 27 different predictors, and there's a couple of boneheads that don't like this housing market, like the National Association of Home Builders. They think house values could go down this year. I really hope they're wrong. The Mortgage Bankers Association thinks it's going to be fairly flat, and then a majority of people think we're going to see a 1 to 2% increase in house values. So my name is Bryan Maddex. There's a quick QR code for my contact information. I am leaving tomorrow to go to Denver to watch my Broncos play the Bills. So don't expect to hear from me tomorrow through Monday. I'll be traveling, but next week I'll be back at it. Thank you so much for the invite, and reach out if you've got any questions.
Thank you, Bryan.
I don't think.
Man, I've been talking. I did my best speech just now and I was on mute. That's too bad. Bryan, thank you, sir. That was absolutely fantastic. I appreciate you sharing.
My
The
pleasure.
next gentleman that I am going to bring on is a very special guy. Let me see if I can you see my screen?
Yes.
Yes.
Okay. So I asked a favor for this gentleman. I said, this is not him. Pretend you didn't see that. Let me pull the correct one. Here it is. I asked for a favor for this gentleman that he is a friend and just a spiritual brother. And I told him, hey, man, I got to have you come out and just give us 5 minutes. Just give us some wisdom, some biblical principles that everybody can take on and apply to their business, apply to their life. And he was up to the challenge. So I'm calling this segment the Kingdom Edge. And I'm going to bring him on. And he's with his full-time ministry, WatchMissionsLive.com, which is an amazing organization that I'm going to let him go into detail about. But Aaron, are you ready, sir?
Absolutely.
All right. Let me see if I can stop sharing this. And can you present?
Yep.
right.
I'm just going to talk if that's all right. Since it's 5 minutes, I'm just going to share and work through something. Then if you guys want, I can share a PDF of my notes so that you can review it and look at it later. But I want to talk to you real quick just about stewardship that outlives you. When people hear generational wealth, they usually think about money that lasts. But Scripture thinks bigger. God talks about the impact that outlives you. And one of the most direct principles that God gives to leaders, builders, and business owners is that we're commanded to steward resources intentionally so that others can inherit blessings, not chaos. This is the purpose of systems. Proverbs 13:22 says, a good man leaves an inheritance to his children's children, but the sinner's wealth is laid up for the righteous. Notice, God doesn't say a rich man. He says a good man. And in Scripture, goodness isn't sentiment, it's obedience. And inheritance isn't accidental, it's designed. This verse tells us something critical, that legacy is not optional for God's people. It's expected. And it's expected because stewardship is a command, it's not a personality trait. Jesus reinforces this in Luke 16:10-11. Whoever can be trusted with very little can also be trusted with much. If you've not been trustworthy in handling worldly wealth, you won't be trustworthy. Who will trust you with true riches? And in other words, heaven's watching how we run our businesses. God doesn't separate spiritual life from financial life. He evaluates both, and it's evaluated through the same lens of stewardship. Biblically speaking, money is neutral. It either multiplies God's purpose or it exposes our personal lack of discipline. And that's why Jesus talks about money more than almost any other subject in the Bible. It's not because money's evil, but it's because it reveals mastery, the way that we handle it. If money masters you, then it's actually going to shrink your legacy. And if you master money under God, it can expand your legacy. So God gives the power to create wealth, but with a condition. Deuteronomy 8:18 says, remember the Lord your God, for it is he who gives you the power to get wealth, so that he can establish his covenant. This verse doesn't say that God gives wealth so that we can be comfortable and have everything we want. It says he gives us the power to create wealth for covenant purposes. That means that your business is not just a vehicle for making money, but it's a tool for continuity. And God gives builders the ability to generate, scale, and sustain resources so that his ways can outlive the next generation. And that's the kingdom edge. So let's make this practical. Biblical stewardship demands three things from us as business owners today. Okay? The first one is that we build with succession in mind. Scripture assumes inheritance. And that means systems, documentation, training, and clarity. A clear path for what it is that you're doing. If your business collapses when you stop working, You don't own a business, you just have a job. You own a job. We all know that. Second, teach what you're building. This is where a lot of people leave things out. Even when they systematize it and they try to pass it on, they don't teach what they're building. Deuteronomy 6:6-7 actually commands leaders to teach the next generation diligently. That applies to values, finances, work ethic, and decision making, not just faith language. And this is something where a lot of Christian business owners get things mixed up, right? As they do it in faith, and we teach the biblical principles, but we don't put it into our values, finances, work ethic, and everything else. And so the values may cross and pass, but the business and the legacy that you created doesn't. And so it's important that we're transferring all of this, right? That we're teaching what we're building. Everything. Values, finances, work ethic, everything. Third, separate your ownership from entitlement. An inheritance is not a handout. Biblically, it's just a transfer of responsibility. You don't bless the next generation by hiding money from them or by just giving them money without wisdom. You bless them by preparing them for it. If you're going to leave something, you need to prepare them to be able to manage it and steward it for them. That's where it's the transfer of responsibility. Okay? This is why Proverbs says a good man leaves an inheritance, not a passive man. So here's the thing about legacy. It's measured after you're gone. Legacy is not legacy until you're gone. Then people get to look at what it is that the next generations do off of what you built. And the uncomfortable truth is that most of us are avoiding this. If your success dies with you, it wasn't a legacy, it was just consumption. Psalms 145:4 says, one generation commends your works to another. They tell of your mighty acts. God's model is relay, it's not spotlight. It's not about you, it's about relaying it on to the next generation. The Kingdom Edge is understanding that business is not just about provision for today, but it's positioning for tomorrow. It's for your family, your community, and for God's purposes. And so, keeping it short and quick, here's the question I want to leave you with. Are you building something impressive, or are you building something that's inheritable? Because in God's economy, the goal isn't just growth, it's continuity. And when stewardship is aligned with obedience, wealth stops being an idol and it becomes a legacy. And that's the true Kingdom Edge. That's all I got. It was 5 minutes.
Nice. Nice. That was
That's
good.
a strong word.
Can you hear me?
Yeah, we can hear you, Ben.
Okay. Aaron, thank you so much, man.
That was
I appreciate
Thank
you.
you so much.
More than you know. That was awesome. That gives me a good segue to tonight's keynote. If you guys have any questions for Aaron, make sure you drop it in the chat. And he loves questions. I know that for a fact. So you make sure you connect with him. All right. So tonight's topic, I've kept it a mystery in a box because I wanted to. But it's about legacy. It's about setting your kids up the right way. It's about tools and instruments most people never learn about. Even if you're not in real estate, this is for you. I'm going to bring this guy on here. And Yuresh, go ahead and start prepping him up. This guy is a stud, okay? Me personally, I'm going to show you. I personally have 4 policies. I actually do what he's going to teach you guys tonight. Let me give you a little background. Carson began his journey into financial education at 16 years old after his father gave him a first-hand look at the true cost of living. Growing up around wealth building strategies and real-world investing, he sparked a deep curiosity about money, financial systems, and long-term independence. By 19, Carson connected with Chris Nagel and immersed himself in the infinite banking concept, quickly learning how to use life insurance as a powerful financial tool. He went on to work alongside industry leaders, earning top-level awards for his sales and service while teaching families how to better manage, protect, and grow their wealth. Since then, Carson has worked with over 3,000 families across the country, helping them implement family banking systems and build a strong foundation for generational wealth. He is especially passionate about educating entrepreneurs and young professionals on financial independence and practical money management strategies. Based in beautiful Southern California, Carson lives with his wife, Anna, and their baby, Wells, and continue to teach the infinite banking concept, helping others take control of their financial future. I don't know about you, but when I was 16 years old, I wasn't doing all this. So you got to give it up to this young man. Carson, are you on deck? Do I have you?
Can you see and hear me now?
Yes, yes, sir. I sure can. Welcome in, sir. The floor is yours. I'm excited to hear. Let me give you a presenter so you can share your PowerPoint and take it away. Everybody's excited to see you and learn from you.
Well, thank you. This is a really cool group. This is my first time being around you guys. This is awesome. I love what you guys are sharing, what you're pushing out, what you're teaching everybody. This is awesome. I love the energy. So super grateful to be here with you guys. And so today I want to start with, and you can see my screen, right? The screen of the money. You can see? Awesome. I want to start with a little bit of imagination with you guys. I want you guys to imagine that you owned a restaurant. Kind of random, right? Let's say in the town you live in now, or maybe where you grew up, if you owned a restaurant, where would you guys go out with your friends and family late on a Friday night? Right? You'd probably go to your restaurant. You wouldn't go to somebody else's. If you owned a salon or a barber shop and you wanted to go get your hair cut, where would you go? You'd go to your shop. You wouldn't go to somebody else's, right? It would be dumb. If you guys are at the gym, you guys ever go to a gym and see the gym owner not working out there, right? He's always at his gym. He's not at somebody else's gym working out. Last one would be, if you guys owned a bank, would you guys make deposits in your bank or with Bank of America or Wall Street? Right? Probably keep money at your bank. If you needed a loan for a car or a house or rehab on a property you were doing, would you go borrow that money from your bank or somebody else's? Right? Yours. And if you took a loan from your bank, would you pay your bank back with principal and interest? Or would you steal from your bank? You would definitely pay it back. You don't steal from your business just like you wouldn't steal from your own bank. So today, what I wanted to talk about today is why all of you, or maybe why haven't you guys decided to become your own banks? This strategy has been used for literally 200 years old. It's been used by the wealthiest families in history to minimize their taxation, pay off debts, and pass money down to their kids and great-grandkids in an efficient way. So when I usually speak in groups like this, or when I'm listening in groups like this, I'm always thinking, what am I going to get out of today's meeting? So I like to start by sharing real quick a couple things I'm going to show you today. One being protection. Because who doesn't want to protect what you earn and what you're making every single month, every year? Two would be tax-free growth. I'm going to hit this topic a lot because there's smarter money moves we can make that we're not often taught. Three is leverage. Because guys, you have tools around you you didn't even know you can leverage. And legacy, because we need to teach these strategies to not just our own families, but our friends and our communities. Groups like these, spreading this and the ripple effect to everybody we reach and talk to is what changes everybody and changes the community. And so I have a system today that I'm going to help you guys hopefully understand. But if we can accomplish and show you these four things, and you can take this blueprint home with you today, I would hope that's worth your guys' time, along with all the other things you've already gained today. Now, I guess, Felipe already gave you a little bit of an intro, but to share a little bit about who I am so you guys have some confidence in your speaker today, I do want to share a brief story. He mentioned it, but I was blessed with some really great mentors. I grew up around this stuff, the personal finances and that world. My dad runs a very successful self-directed IRA company that has handled over $1 billion of real estate and pending, private lending transactions. There's a couple photos of us speaking on stage and different events and stuff. But as I started my career, I was able to follow him, tag along in different rooms and networks that most people really never get access to their whole life. And I was curious. I wanted to learn these things because I saw it happening. I saw wealth being built in the real world. And that led me to some incredible mentors besides him, professional salespeople, real estate investors. Chris Noggle, like you see here, he's on the left. I ended up becoming a top sales rep at a massive insurance brokerage, and we built a real estate portfolio on our own as well. And so I've spent this time teaching people about personal finance, cash flow management, banking, and I was doing these strategies myself when I was learning from these people in these rooms. But as I spent years around these people, something started to bother me. Every strategy they taught had a missing piece. And so when I learned this missing piece, it changed everything for me. And I wanted to put all my time and my effort into building and teaching this to everybody, because this is something that affects every other financial strategy or investment strategy you do without even noticing that it does. The strategy is called the infinite banking concept, IBC. And so as I learned this strategy, I started teaching this to those around me, started working with other groups and networks. And at this point, I've met with over 3,000 families across the country, teaching them this plan. And this has allowed Anna, my family, and I to travel the world. We've built a pretty solid real estate portfolio around the country. And really, we've built the perfect foundation for our family to build generational wealth like those families have using this strategy in the past. So to dive into today, I want to talk about banking. This is something that not a lot of people talk about or understand, and it's really a major paradigm shift for most people when they start learning about it, because what banking actually is the business of protecting money. It's interesting that when we talk about banking and it being the business of protecting money, this probably affects every single component of your life, whether you understand it or not. So wouldn't it make sense to try and learn about the banking world and try and see how it can apply to everything you're doing in your investment life, right? And so throughout this presentation, I want you guys to keep an open mind as we go through this, because once you see the banking world and how it actually can complement your life, you'll never look at money the same way again. So in terms of banking, let's talk about banking as an act, and the verb form of banking. Well, if you look it up on Google, you'll read that it's protecting money, it's depositing money, and it's lending money. So it's doing these three things throughout your life. And who do you do banking with? Wall Street, right? The big banks, Chase, US Bank, JP Morgan, those people. Do they really protect your money better than you would? Probably not. Wouldn't you rather find a place you could better deposit money and lend money with yourself? If you could be the bank protecting money, depositing money, lending money, somewhere you could be in control, that would change the game. And so to start, let's talk about what banks actually do with your money, so we understand what banks do from the beginning, so we can learn how we can replicate that. So let's say you had funds you were going to leave in a bank account, call it $100 grand, you were going to deposit into a bank. And if your bank was awesome, this bank paid you 4% every single year, no doubt. That would be nice, right? Well, what are you going to do when you deposit that 100 grand with the bank? You'll think it's an asset to you, and it might look like that, but what does the bank immediately do with that money? They lend it out. They lend it to somebody trying to buy a house at maybe a 7% mortgage. When that person then closes on the house and they pay the seller, where does the seller put their money? Right back in the same bank, right? So the money kind of just went out and came right back, and the bank made a spread on it. Then what's the bank going to do from there? Well, probably lend it to somebody else. They're not going to let that money sit there doing nothing. So maybe they lend it to somebody on a car note at 8%. And when they close on this car, they'll pay the car dealership. And where's the car dealership going to put their money? Right back in the same place. And the bank will probably lend it to somebody else, somebody who needs a home remodel loan at 9%, who's going to pay their contractor to do the work and is going to put it right back in. One more example of a credit card, and where do the credit card companies store their money? Back in the bank. So this is important to understand, because while you're making 4%, the bank's making a spread. They're making 7%. They're making a 3% spread. And then while you're making 4%, they're making 8%. They're making a 4% spread on that. Then when you're making 4%, they're making 9%. So they're making, if you total all of these spreads up, they're making 20% more on your money every year than you are. But if you actually do the math, how many times does 4% go into 20%? 5. So that would mean that the bank's making 5 times or 500% more on your money every single year that you keep it with them. This is not a stat I'm making up. If you go to BauerFinancial.com, you can read that banks make between 400 and 1,300% on the money that you leave there every single year. You can actually go read any bank's annual reports from any year in history, and it'll show you how much banks are making on your money every year. So when you guys, in any town you live in the country, who owns the nicest property in the main corner of downtown of whatever city you're in? The banks do. It's because we're paying for it. So when the government comes out with stats like these, 5 out of 100 people will be financially secure at retirement age. This is a real stat. This should make you think, make you wonder, why? What's happening? Because according to the Social Security Administration, 5% of people are the only ones that will be financially secure at retirement age. Like secure, that doesn't mean rich or well off or comfortable, just secure. So if you think about that in the US, guys, the land of opportunity in this great country we live in, that doesn't feel right. That means 95% of people walking around the street are going to work until they're 65, 75, take on 2 jobs, not because they want to, because they have to. And who's at the center of all these financial transactions? The banks, Wall Street, right? So when I first learned this strategy, I read this book called Becoming Your Own Banker. It's a fantastic book. Everybody in this room should read it. But this book is the foundation to understanding how banks work and how you can take advantage of being your own bank. And so in this book, he highlights the problem that I'm talking about today and that we'll dive deeper into. But the problem is that you finance everything in life. Well, what does that mean, you finance everything in life? Well, it means you either borrow money from somebody, a bank, and pay them interest, or you use your money and pay for something cash, but that means you give up the interest that you could have earned on your money. So now, when you look at, I guess, paying for something cash, in America, some people think that's really, really good. Dave Ramsey thinks that's great to pay for things cash. But there's still an interest cost to that. There's an opportunity cost of paying for cash. That interest cost is the ability you could have earned on that money the rest of your life. You could have bought a rental with that money, but you ended up spending it on whatever you end up buying. And so that interest cost lasts forever. That number becomes extremely substantial when you apply it to every purchase you ever make throughout your life, because you're doing it with another bank. And so the problem, he states, is that you finance everything in your life. It's just with other banking organizations. We've taught people to get into business or invest, but the bankers are the ones controlling all of the flow of money. Whether we pay cash or finance, it doesn't matter. They're at the core of it, collecting, controlling, and making insane profits off all the hard work that we're all doing. And so this is why we need to become our own bank. So you can be the center, the one in control of all those transactions. So you can be the one earning interest always. So now it's time, I want to ask you this question. Could it be possible that there are more efficient environments to store wealth outside of commercial banks that you're not aware of yet? Genuinely, you can think about that. Sit with that. Could it be possible that there's more efficient places to store money? And the more I studied money and these strategies, the more I realized I didn't know. Like, there's so many things. It's a never-ending journey of financial education. There's always something new. But when I pose this question, think about it, because this is going to change your mindset around where you should be storing money, how you should be financing things, where you should be doing those things. And so I promised you guys today at the beginning of the presentation, we'll talk about how you can become your own bank. So if we're going to take over those banking activities in our life and be our own bank, then we need a better environment to store our money. We need a new bank. So what is this new bank we're going to use? What is your bank? That means anytime you ever needed to buy something, again, or invest in something, or rehab a property, or buy a car, or save money anywhere, like all those transactions, we're going to do it from your bank. So if we're going to set up a bank, how would you want your bank to operate? What do you want your bank to be like? What are the attributes of your bank you would want? And I want to compare your bank to other people's bank. Or sorry, not other people, but the traditional banks, the Wall Street. So if we're going to look at a bank and storing money somewhere and financing things from a place we can better control, first off, we need liquidity. So if we're going to set up a new bank somewhere, we need liquidity. And your bank and anywhere else you store money, Wells Fargo or Chase, wherever you keep your cash, it's liquid. That's kind of the whole point. We need money to be liquid to be able to finance things. So if we're setting up a bank of our own, we need it to be liquid. Some other attributes we'd probably like if we're going to set up a bank. One is to have growth. The average savings account in America right now pays 0.07%. If your bank was going to earn 2, 3, 4, 5, 6, 7% uninterrupted and compounding, that's pretty powerful to have from a bank account. Yes, high yield savings accounts can do that, but as we're seeing rates drop, we see those growth rates drop. So if your bank was always growing despite the market, that would be pretty impactful. If your bank could be tax-free too, that would be pretty sweet, right? Not many places are tax-free. If it could be safe, totally protected against lawsuits, judgments, liens, again, kind of the market crashing in that whole world, and stability in times of any economic uncertainty. What if your bank was totally safe? Guys, in 2009, 364 banks went bankrupt. What if your bank wouldn't have? My bank didn't. Sounds like Felipe's didn't. Now, wouldn't this be a more efficient place to store money? This would be a place you could control, you could count on, you could use as a foundation to finance really everything throughout your life. And life's chaotic. Like that just is what it is. We have all these different opportunities all the time. We're always trying to invest, always got different life problems and challenges. Actually, the opportunity that this would give you to put money somewhere that was still liquid, so it was always usable, but it was compounding growth, it was guaranteed, it was tax-free, that would be not just a great place to store money, but give you the peace of mind. I don't know about you, but wouldn't you agree that if you could store your money in a place like this, you would? Right? So when we want to set up these banks and use it as a place to finance things, we want to use a bank, we call it kind of as a vehicle. And we call it that because it's not an investment. Your bank's not an investment. The place you store money is not an investment. It's just a place you run your money through. You protect your money, you borrow from it, you lend from it. And so we want to use our bank as a vehicle. And so before I tell you guys what the bank is that we're going to set up, I want to read this quote to you by Will Rogers. He says, "The problem in America isn't so much what people don't know, it's what people think they know that just ain't so. So don't judge this at first glance, but try and understand it. The vehicle we use to do banking is none other than a dividend-paying whole life insurance policy from a mutual company." Now, this is the point where if I'm speaking live, I would say, hey, I'm watching you. If you go to the bathroom because you see some life insurance sale coming up here, don't. This is not what you think it is. This is totally different than what you might have been taught before. This is not the life insurance your broke brother-in-law sells you or your insurance agent down the street can get for you. This is very specially designed and engineered whole life. And a lot of people have questions about this because they hear Dave Ramsey and Susie Orman's talking about how life insurance is such a terrible place to put money. They say buy term and invest the difference. And honestly, I would agree with them. If you put your money in a regular insurance policy expecting it to do what I'm about to show you you can do, I'd be pretty upset. This is not that. This is specially designed and engineered life insurance. So when I first learned this, the common things I thought about whole life and what I was told about it was that it had three things. One, it was a low rate of return vehicle. Two, it was expensive. And three, that it was the worst investment of all time I even heard somebody say. So, if you're taking notes, this is maybe the only thing you really need to get out of today, if anything, is that whole life insurance is not an investment. It actually has nothing to do with investing. Whole life is considered an alternative asset class and a type of permanent insurance. And if you read the actual contract, it says that it provides a guaranteed cash value growth, guaranteed death benefit. So if you can take anything, this is not an investment. Investments require risk. If everything's guaranteed, there is no risk. This is no longer an investment. So when you start talking to your neighbor or your business partner, or your spouse later this week, telling them about this strategy, and they start telling you, that whole life thing, it's a terrible investment. You should not do it. It's got a low rate of return. as soon as you hear someone say that, as soon as you hear someone call it an investment, you now know that that person has no idea what they're talking about because they can't even correctly identify what type of asset that it is. So you can't get a policy built like this from just a regular insurance agent or a financial advisor. It has to go through a banking professional, which is what I am and our company does. So if we want to be mimicking banks, actually, you know what? One more thing I want to add. This slide will show it to you. If we're looking at how these policies are designed, here's how I look at it. When I say it's specially designed and it's different, I'd compare it to this. Have you guys ever been to a car dealership, seen a Ford Focus like this sitting in the dealership driveway, and thought, that's a fine car, right? It's normal car, right? But if you were on YouTube and you looked up this car driven by Ken Block, you'd see this guy going 150 miles an hour, drifting around a turn in this Ford Focus. And so what's the difference between these two cars? Design and engineering. So the specially designed whole life that we design looks nothing like life insurance. It actually looks more like a supercharged bank account, like this is a supercharged car. And so 2 minutes ago, I just asked you guys, would you guys like, if you had a place you could put money, or you would agree that there's a place you could put money that had these attributes, you would love a place like this to store money that you could bank from and count on and control, right? Well, your policy is that. All those attributes, I'm pulling it back up. Yes, you can design it where it's liquid right away, immediately. You don't have to wait 10 years to access it. You're going to get guaranteed growth, and it's going to compound forever. It's going to be tax-free, protected, and stable. And when I said that banks went bankrupt in 2009, insurance companies didn't. The companies we work with did not. They've been around for 200 years. They've been profitable every year. They've been growing every single year. And that's why we're getting these attributes on our bank. It's a place we can deposit money and lend from and bank with. So at the beginning of the presentation, too, I told you that, this has been done for a long time. Wealthy people have been doing this forever. Well, to back that claim up, these people you might know. The Rockefellers on the top left, one of the wealthiest families in American history. How'd they build their empire and their generational wealth? Through this strategy. Walt Disney on the top right, how did he start Disneyland? From a loan from his whole life insurance policy. These billionaires on the bottom right, you all know both of them. Between these two guys alone, they have over $1.2 billion in these policies. Politicians too. Add in the last presidential candidates, Trump, Biden. Both of them, no matter whose side you're on, doesn't matter. Both of them had these insurance policies built into their plan, and they still do for all their kids and grandkids. And so it's not just us talking about this today. This has been done forever. And the crazy fact is that these people are not the biggest purchasers of these whole life policies. Maybe you think billionaires are the biggest purchasers of these policies. Wealthy people do this. Actually, the number one purchasers of these whole life policies in the world is traditional banks. You can look it up. BOLI, bank-owned life insurance. These four banks alone have over $60 billion in these specialty designed policies. And you'll find that these companies, they own more whole life, not IULs, not term insurance, not variable insurance products. They own more whole life than they own in land and buildings combined. They're the number one purchaser in the world of these policies. So we need to ask ourselves, are banks stupid, or do they just know something we don't know? Are they not telling us something? So guys, they're smart. They know what they're doing. Let's just find ways to mimic them. And if the banks are literally choosing to store their wealth there and then leveraging it, lending it, borrowing from it, protecting their money there, why aren't we? There's one more analogy or example I want to share with you guys before I go into some numbers and show you some real life examples. But I want to talk about compounding growth for a second. Kind of change the topic, but I find this exercise really helps. When we're looking to build a foundation of where to store money, we want uninterrupted compounding growth. So I have an analogy for you guys. You might have already heard it. Would you rather have $1 million today, or if I was to offer you a penny today, but stipulation, that penny doubled every day for a month? So 30 days. Would you rather take that penny that doubled for 30 days and stopped doubling at that point, right? Or the $1 million today? I'll hand it over right now. We already got some people in the comments. You already know. Of course you want the penny. I'm talking about compounding interest. You already know. You're smart. Let's go through the math of why, though. So start on day 1, it's 1 penny. Day 2, it's 2. 4, 8, 16, 32, 64, $1.28 continues going. At 30 days, it would be at $5.3 million. That penny would go from $1 to a penny to $5.3 million. That is a whole lot more than $1 million. So yes, you would have wanted that. Good call, guys. But let's stop here and appreciate this for a second. I'm sure you've all heard Albert Einstein say that the 8th wonder of the world is uninterrupted compounding interest, right? This is why. Money sitting there doing nothing other than compounding on itself is powerful. And the longer you give it, the better it gets. So let's change it up and throw one wrench into this. What if you had the penny, doubled every day, same bet, but what if there's a fee attached to it? What if there was a 2% fee attached to it? And we all know there's some places you can put money, some investments you can do, some brokerage accounts, some 401ks. You can put money where you have growth, but there's a fee attached to it. And 2% is pretty average in the financial industry. So if you took a penny, doubled every day for 30 days, but had a 2% fee taken out every year, your penny would only get in 30 days to $2.9 million. That 2% fee just eliminated over $2 million of compounding. Is 2% of 5.3 million, 2 million? No, right? So compounding fees against you actually hurt way more than you would have thought. Next example, what if you took a withdrawal? What if you had a withdrawal against your penny doubling? Say your penny doubled every day for 30 days, but on the 15th day you took $100 out, and the 25th day you took $100 out. Okay? So $200 of withdrawals in total, $100 on 2 separate days. That $200 withdrawal actually would cost you over $3 million of losses because your penny only would have got to 2.08. So a penny only gets to $2 million in 30 days instead of 5.3 with just a $200 stinking withdrawal. $3 million of losses of compounding is a lot more than a $200 withdrawal, right? And last scenario, what if there was taxes? What if you had a 15% tax on the penny doubling every day for 30 days? That penny would only get to $500,000. And the crazy part about this example is you only would have paid like 150, 170 grand in taxes over the whole time period. And that 150K of taxes would have literally cost you over $4 million of compounding losses. So put this into perspective. In our American society, the financial advice we're given is put money in 401ks, IRAs, high yield savings, CDs, those vehicles, brokerage accounts. How many of you would agree that those places actually have all 3 of these things going against them? There's a small fee for somebody managing it. The tax is always going to be there. Maybe it's deferred, still there. And you can tap into the money and they'll let you tap into it. You also have a fee attached to it when you tap into it. And so we wonder why Americans can't get ahead. Lucky enough, you guys in this room are all mainly in the real estate space. So you're probably out of the markets and out of that world, which is great. But still, where are you choosing to store your cash? Where are you choosing to store money before those real estate investment opportunities come around? You have to put your money somewhere. And so, guys, uninterrupted compounding interest is the last piece here that I want to talk about. And it's so efficient and so powerful. And the reason it's so powerful is because of what it can do when it has nothing going against it. And guess what account? Guess what place you could put money that has none of those 3 things going against you? These specially designed whole life insurance policies. Your dollars sit and compound always. That penny would have gone to 5.3 if it was in a policy. And instead of taking a withdrawal. You could have taken a loan against it and still had the policy growing. So put that into perspective here. That's why we're using a policy, because it gets that growth. It's still liquid. You still can use it. It now allows you to be in control of the banking you do throughout your life and you to be the one earning interest always instead of the banks. So now that we've laid the framework of the power of whole life, the credibility behind it, it's not just me, guys. A lot of people are doing this, right? It's done forever. How banks operate, what they're doing, and how they're actually using this as well. Why you now would probably want to take over those roles in your life and try and find a way to better be the bank. And now you understand interest and compounding growth on your money and why that's so important. So let's go put this now into action. I'll show you guys here a couple examples of how we use a policy, how we set it up, how we finance things throughout our life, and how we're the banks. Felipe, if you have any comments as we get into these examples or want to share anything, feel free to stop me. But we'll go into these examples.
Absolutely, Carson. No, I think you're doing great, man. Just keep hammering. I'm going to encourage anybody that's got a question. We'll do a Q&A at the end. So just drop it in the chat, and then Carson and I will jump in and go over anything.
Perfect. So, example we'll start with is buying a car. Easy example. We use this example because everyone buys a car. Everyone knows what it's like to buy a car. Everyone either saves money up to buy the car or they finance it. So everyone understands this is a way you can take back the banking in your life by just one simple transaction. Every car you buy every 5 years or whatever it is, let's start with that and understand this and then go on a deeper level. So if you were to buy a car, you have options, right? You could go lease it, pay cash, take a loan. What if instead of doing that, we saved money up in a policy and then used our policy to finance it? So let's show you that example. And remember, we're talking about using the policy as a vehicle. We call it a vehicle because this is a place you're running your money through. Again, we're not putting our money in the policy, letting it be an investment forever and hoping it works out and gets a big return. That's not at all what we're doing. We're using it as a banking vehicle, a place to finance things from. So when we're talking about banking with a policy, there's three things I want people to understand when we first look at this. I'm going to show you here a policy in a second, but I want to start by sharing you how we look at these policies. Premium is the first word that comes up when it comes to life insurance. When people look at life insurance, people think, I don't want a premium. They look at their home insurance premium, their car insurance premium, their health insurance premium, and it bothers them. And I've never met a person who wants more expenses, more premiums, right? But when we're designing this policy, remember, it's all liquid, and whatever you put into it's available, it's no longer an expense. We need to look at it as more so a deposit. And I've never met somebody who doesn't want to deposit as much money as possible in their bank, right? So if your insurance policy is structured correctly, and it's acting as a bank, then let's look at these premiums as a deposit. Let's change the way we're looking at contributions. Second would be age. Some people look at this too and say, life insurance is expensive. I can't do this. I'm too old. Well, think about it this way. If you're going to save $10,000 every single year and you were going to put it in your savings account and put it away, or your great-grandparent was going to put $10,000 away in their bank, it's still $10,000 every single year. There's no difference. Maybe you would get a bigger death benefit than someone who's older than you on the same 10 grand of contributions because they're older, they can't get as much insurance. But if we're not building this policy for the death benefit, then who cares? 10 grand is going to earn the same amount, earn the same growth, be liquid the same way no matter how old you are. So age does not matter in this situation. And the death benefit isn't the main driver either. We're not building these policies for life insurance. We're not building it for the death benefit. We're building it to be able to have cash value that we can control, we can use to do banking with, and have that growth built into the policy. Those are the attributes we want from this policy, not the death benefit. Yes, it's on there, and we try to minimize it as much as possible so we minimize the cost of the insurance. And so you will have coverage built into this, which is definitely important to protect you and your family. But I'm just making the point that we're not using this and setting it up for regular insurance for the coverage. It's for the cash value. So let's go into an example. This is somebody we worked with a few years back who wanted to save 10 grand a year. And they said, that's just what I save. I put it in my savings account every single year. And we said, great, stop doing that. Let's put that 10 grand in your policy. So we deposited 10 grand every single year. Cash value over here on the right, the cash value is what you have access to use inside of the policy. So in year one, you put in $10,000 into the policy, you have access to 6 grand he had, plus a death benefit. Year two, he puts in another $10,000, his cash value is now $12,000. Then he came to us and said, hey, in the third year of this, I want to go buy a car. I've put in 30 grand. How much cash value will I have available to go buy myself a car? We looked at the math and said, you can pull out $25,000 from your cash value in the third year, which is why you'll see in the third year the cash value is only $4,000 because it dropped by 25 because you took 25 out to go buy a car. So year three, recap, he's put 30K into this. He's taken 25 out to go buy himself a car, buy a car cash. So if he's going to take a loan against this policy from himself for $25,000 to go buy the car, then he should go pay himself back as if he was literally the bank. So we looked at car loan rates at the time, said, great, a 60-month time, $500 a month, that's what you should pay yourself back with. So again, instead of putting $500 a month aside, building it up to buy a car cash, or instead of getting a loan from the bank and paying $500 a month for 60 months, we just said, put this into the policy, take a loan from yourself, and pay yourself back as if you are the bank. So that's what we did. So if we want to recap this, $10,000 a year he paid into it. He put in 70 over the 7 years. He also put in $30,000 to repay his policy over the 7 years. And he took 25 out to buy the car. So really, his net injection into this is 75,000. He put in 100, took out 25, so really he put in 75. So he put in 75 grand over the 7 years into the policy, and look at his cash value at that point. His cash value is $67,000. That's 91% of his 75. I know I'm going into a lot of numbers here, so if you need more clarity, stop me and I'll go deeper into this. But this means over 7 years, he has $67K available in his policy. He has a car fully paid for in his driveway, and he put in 75 into the system. So he basically got 91% back on the car purchase. Let that sink in. And I'll go through this one more time to hopefully clear this up and make it a little simpler to understand. Let's say in the 8th year of this policy, he stopped contributing to it. Just no more contributions. Cash value continued to grow, but he wanted to take another loan to buy another car. So if you take a $25,000 loan from the policy, again in the 8th year, and go buy yourself a car, pay yourself back just as you would anyone else, $500 a month for 60 months. Over that time frame, those new 5-year periods, he would have taken nothing in premiums, $30K to repay himself, and $25,000 was taken out to go buy the car. So really over those 5 years, he put in $5 grand. That's all he really put in. He got the car. So over that 5-year period, he put in $5,000. Okay? And from year 7 to year 12, during that 5-year period, his cash value grew from $67,000 to $91,000. So the cash value increased by $23,000, and he put in 5. Again, he put in 5 grand into this and grew 23,000 and bought a car. He was the bank. He was the one earning interest, paying himself interest, financing things in a system he can control. So he made money off of buying this car. If you look over the entire 12-year period, he put in $75,000 in the first 7 years. He put in $5,000 in the last 5 years. So he put in $80K. He puts in $80K into the policy over 12 years. He has 2 cars fully paid for in the driveway and $91,000 sitting in cash value left over. He made money off of buying 2 cars. Does that make sense? That because, again, all of his contributions, his deposits into his bank are growing forever. And then he's financing these things through his bank and he's paying himself back interest. So he's at the center of all these transactions. And so because of that, He's making money off of buying these cars. There's 3 rules we incorporate when doing this strategy. 1, you got to pay yourself first. You got to train yourself to put money aside, save money outside of your business, outside of your typical expenses, and put money somewhere that you can control, that you can be comfortable with. And that's what we mean by paying yourself first, putting it somewhere for you first. Then second, paying yourself with interest. Because if you're going to take a loan from yourself, you should pay yourself interest as if you're paying anybody else. And last, we want to recycle and recapture that money, because wouldn't it be better to pay yourself the interest compared to somebody else? Right? It would. So I know that's a quick example, but how many of you guys wish you did this the last time you purchased a car, made money on buying it instead of spending? You can let us know in the chat. How many of you wish you knew this earlier so you can finance the next tax bill you have, the next investment you have? How about the next primary home you buy? So when we look at this, if this works for a car, then what else does it work for? Guys, literally everything. Anything you invest in, you buy, you purchase, can flow through your bank, and you can be the one making money the whole time. I'll give you one more example. Let's change it up. It's a different diagram and maybe show this a different way. If you had a policy and you had a debt you needed to pay off, let's say you got a $23,000 line of credit, you owe 9% on it, you've had it for a year and you're struggling to pay this line of credit off. Well, let's just say, in the same example, instead of that guy paying for a car at $25K, what if he took a loan for $23 and paid off the line of credit? Now his debt's gone, so he takes a loan from his policy, it goes to his bank account, pays off the loan. If he was paying $289 a month for that line of credit, which, just in those number scenarios he would be, what would you do with $289 a month now that you don't have to pay that anymore to them? Well, remember, you took $23 out as a loan from your policy, so you got to pay yourself back. So why don't you just pay yourself what you were paying somebody else? So if now you're going to pay yourself back $289 a month, now you're recycling. You're recapturing the payments to pay yourself back. So, question for you guys. How many times would you be making money or earning interest in this scenario? The answer is 2. You're making money on the spread because the policy is growing while you're using the money. So you're making money in the policy, and you're paying yourself back 9%, $300 a month. That was interest you would have paid somebody else. Now you're paying yourself. So you're making interest twice on this transaction. And remember now, if you would have had $23K in cash that you could have paid off the debt with, you would have lost that money. You would have lost the ability to ever earn interest on that ever again, or grow with it, or buy a rental with it. You would have spent it. But by having it coming from the policy, that initial amount is going to sit in the policy and grow for the rest of your life. You're never going to lose the ability to grow. And you'll just pay yourself back. So what if you don't have any bad debt that you need to pay off? What if you don't need to buy a new car? Can you still benefit from privatizing your bank? Should you still be your own bank? The answer is yes. I don't have many things I need to be purchasing in that direction. I am in real estate just like you guys. Every time I have surplus cash, I'm storing it in my policies. And then when the next best rental opportunity or syndication to lend in or fund that I want to invest in comes around, I use my policy to invest in all those opportunities. And then what do I do when I get returns? Well, if this is my bank, I just repay it. I just refill it. So all of my finances, all my investments are flowing through my policy. So we've gone through a lot today. I'm trying to be super quick because I want to respect you guys' evening. So sorry if I'm going too fast and going quick. But 3 things we talked about. We talked about how banks profit by leveraging your money. So let's just flip that, be our own banks. Talked about how you don't really need to be rich to do this. Anyone really can do this. You just need the right tools, the right policy in place, the right team to help you do it. And with the uncertainty of the world today, this family banking strategy gives you total control over all the finances and all the financing you do. So if you want to have certainty and control over your money throughout your life from here on out, then you absolutely need to set up a banking policy. To wrap up, a few things I want to throw in here to share some additional details about this. One, the policy grows tax-free. I want to remind you of that. The death benefit grows tax-free and creates a legacy for your family. Policies are safe from judgments, liens, even in some states, actually bankruptcy and divorce. Tax-free income from the policy in retirement, which you can utilize once you hit that age. And you can set up policies on kids, grandkids. You can use policies to finance college tuition, to start businesses. This can be your new 529 plan. This can be a place you store capital to pay for a car for your child when they hit 16. How do I fund my policy? Some people ask. You can fund it at whatever frequency you want, however you want, any year. The minimum and the maximums depend on you, how old you are, how much you're saving, what your investment strategy looks like, what your debts look like. That's what our team specializes in. We'll go deep into this one-on-one with you to show you how to incorporate this, how much you should be putting into it or not putting into it. And on top of starting it with some sort of contribution to build this bank up every year, you also can dump money into it to get it started. If you have 50 grand sitting in a high yield savings or sitting in cash or in whatever account you have, losing value, you can dump it in all up front, get it safe, get it liquid, and then use it moving forward for your investments. And you'll have access to anywhere between 60 and 90% of what you put into it in the first 30 days. You don't have to wait 10 years to access the policy like normal insurance. You have access to it right away. This allows you to be the bank quickly and do things fast. Let's talk about policy loans real quick. If you take a loan against your policy, these are the main questions I get. I'll answer them now. These policy loans are guaranteed. You can always access the policy loans, the cash value. They're not ever not available. You don't ever have to ask for it. No credit checks, no approvals. They send you the funds once you request it because it's your money, it's your policy. And they're private. They don't go on your credit report. So if you want to pay off credit card debts that are killing your credit and you want to consolidate it into a loan against your policy, no one knows about it. Now your credit score shoots back up and you have a loan against yourself to pay yourself back with however you want. There's no minimum and maximums to repaying your policy. You're in control. If you miss paying yourself back, you're in control of how you do it. So look in the mirror and tell yourself how to do it. You pick how this all happens. So why our company, the Money Multiplier? First off, I want to say we teach this strategy. We're an insurance brokerage. So we work with multiple insurance companies and carriers. We can show you how to set up these policies, who to set it up with, how to then use it ongoing. And we're here as not just a support to help set it up, but to show you how to use it over time. Every quarter we'll check in with you and ask if you're wanting to pay more into it, take less out, use it to invest in real estate, ask for help on how to repay it, how to utilize the policy. Our guidance to teach you to bank with it is forever. Because setting up the policy does not solve your problems. Using the policy does. So you have to understand the product, understand the policy, but you need to have someone help you know how to use it over time. And that will become more familiar with you as you're doing so. Other couple things, I will say everyone on my team has been doing this and has their own policies, and we've helped combined over 20,000 families across the country do this. So we have the expertise, we have a big system, and I don't know if many of you know about the infinite banking concept, but we are the largest insurance brokerage teaching this in the entire nation. This is our niche. This is what we specialize in. We don't do everything. We don't do all kinds of insurance products. We don't do trust and tax strategies. It's banking. We specialize in this, and we're really, really good at it. So to wrap up, guys, one of two things are going to happen to us throughout our life. One, happening right now, we're all alive. And aren't we better off with this than without? I just showed you how you can be the bank, finance things, make money on purchases. So yes, we are. And two, we're all going to pass away. It's just life. And won't your family be better off with this? You're going to get a death benefit passed down to them just by you saving money in a different place. No savings accounts do that. No savings accounts prepare and protect money for your family like these policies do. Guys, don't you wish you knew this when you were my age? Don't you wish you could teach your kids this? Don't you wish your parents set this up for you and build a family system when you were just building your careers? Right? So I want to end with a quote by Warren Buffett. If poor people would just do what rich people do, they wouldn't be poor anymore. I'm sure you've all heard this quote. Guys, we didn't come here to procrastinate or to just listen. We're here to take action and learn and incorporate strategies that change the game in 2026. So, because we are paid from insurance companies for the business that we bring them, there's literally no cost for you to do this. I don't charge you to set this up. I don't charge you to meet with us. I don't in any way manage your policy, manage your money, pick what you do with it. This is your system, your bank, your family bank you're setting up, you're using with the insurance company. But you need someone to help you set it up and know how to use it. And that's what we're here to do. So this link, it's not, we can put it in the chat. You just go to carson.beyourownbanker.com. If you do want to meet with me, this is my personal calendar, not my team's. If you want to meet with me one-on-one, go through your investments, debts, planning, and figure out how to be setting up these policies for you, go ahead, set up time to meet with me. If you need more time to learn this, we'll put tons of resources into the follow-up emails with Felipe in the group. So you definitely can get those and study more of the strategy. To be honest, this strategy took me months, years to really wrap my head around and fully accomplish and do. So I don't expect all of you to understand all of this in a 30, 45-minute presentation, guys. So don't feel like you need to. You should feel overwhelmed. You should feel excited. When we meet, we can go through and break down every piece of this in more depth so you better understand it, because I know there's a lot of moving pieces with this. So again, if you do want to meet, that's the calendar link to do so. You can put that in your own browser. If you just want my email to request more resources and YouTube videos we have to teach this stuff, we'd love to do that.
Yeah, we'll drop the link on the chat so everybody can access. But that was great, Carson. One of the things I was going to say is the death benefit is really a plus. Whenever we set this up, that's just a little caveat, right? You can do everything you are doing with your policy, with the banking, and then the death benefit to all your beneficiaries is just an extra caveat. I think that's very important to know. And then I was going to say, it's important to do this now when you are healthy and when you are young. When we set our stuff up, whatever life insurance Carson sets you up with, there's multiple agencies that do this type of policies, and he would be able to best pick which one for your scenario.
Yeah.
But they send you a nurse, and you do blood work, you do a physical. You got to make sure you're insurable. So it's important to do this young while you can. And one little rule that I thought myself, and I don't know if this is true or not, Carson, but I always asked, what's the minimum policy that I can get? Because we have multiple policies, but what's the minimum policy that I can get the best bang for my buck? And the way it seemed to the math to work is my age times 100 plus 100 is usually the monthly contribution. So I set our stuff up when I was 30 years old. So each policy we pay around $400 per month for each policy. So I don't know if that rule applies to everybody or if it's true or not, but I don't know if you want to expand on that a little bit.
Yeah, great point. I mean, we're using the policy as a savings vehicle. So really, whatever you guys are saving outside of your business can be stored in the policy. If that's a little bit amount of money, if that's a lot of money, great. We'd go through those scenarios individually. But yes, we would recommend that if you can't save 10 times your age per month, so yeah, 30 years old, $300 a month, 50 years old, $500 a month, right? If you can't save at least that as an individual, then we would say don't try this strategy yet. It's kind of the threshold. Once you can be comfortably saving that consistently, then let's dive into your numbers, go through what you actually can consistently be saving and what you plan to be using for future purchases, future investments, future deals, and all of those dollars we want to capture in the policy first and then use the policy for those opportunities.
Awesome. Good stuff. Anybody else has any questions? We'll give about 1 to 2 minutes and then we'll let Carson go. But man, that was great. I really appreciate you coming out. This topic is so interesting. It amazes me when I ask people just in a normal conversation and they've never heard about this. They have no idea about it. So I think it's very important to educate and let people know the tools that are available for them.
And true story, one day a nurse just comes knocking in our apartment, like, I'm here to draw blood. I'm like, draw blood. So, I never knew about this, but, Felipe is always so good at, setting us up for success. And then I started learning about it and then, in turn shared it with all my family and friends. And so now they have their insurance put in place. But yeah, it's just amazing,
Awesome.
I think it is a very unique concept, Carson. Carson concept. Trying to get that out. And for many of us hearing it for the first time, because I think you led in it with it, putting your money in the bank and letting it sit, and they're eating off of that. Now there's the opportunity for you to eat off of your own. I love this, man.
Thank you.
All right, guys. Well, let's wrap this up. Carson, thank you again for coming out. We'll send an email out with his contact info again. I put it on the chat and I put the link. And then if anybody has any questions, reach out to him, book a time with him, go over your scenario, and he'll be sure to help you. Carson, thanks for coming out, man. Enjoy the rest of your night. You're welcome to hang around if you'd like, or if you got better things to do, we understand. But we appreciate you, sir.
Thank you, guys. It was great to meet all of you as well.
Carson. Thank you so much. All right, babe. What do we got
guys?
next?
Well, let's keep the show on the road. We are going to be out by 8, as I promised. Let me put some music on, and we're going to give some prizes away. Does anybody like prizes in this call?
Yes.
I love them.
You do?
Oh, absolutely. I have kids. My kids love prizes.
Only you two guys? That's it? Nobody else?
Where's the
We might have to cancel the prizes then.
No.
We don't get some excitement up in this. Let me get this thing pulled up.
Carolyn, I guess you and I will be the only winners tonight, huh?
Right, exactly. We're all our winners. Come on, guys. Let's go.
How's the music? Let's put some music on the background. Let's get the energy up. Can you guys hear music or no?
People are getting excited now, babe. Now they're too excited.
Are they? Okay, guys, put your clothes back on. That's too much. That's too much excitement.
Kevin wants to be a first time winner.
Ooh, let's go.
All right. That's what I'm talking about.
So, Felipe, do you want to talk about the prizes?
Let's go.
Yeah, well, I'm trying to get my disaster of a PowerPoint presentation up. I had spent all day doing this, guys. I had it all organized, and then the system just completely undid everything I did, and it's all over the place.
Oh, life, baby.
But this is how we're gonna do this. Get your phones out if you want prizes, of course. If you don't, then don't worry about it. But you're gonna scan this QR code right here. Can you see my screen?
Yes.
Yes.
Okay, so you're gonna scan that, and then you are automatically gonna be inside. Okay.
Oh my God.
Okay, now we're talking. You're gonna be in the money. And the first prize, keep scanning, okay? Keep scanning. The first prize we are going to give away is going to be a $25 Amazon gift card delivered via email as soon as we finish this call. I won't put it on the chat because then everybody's going to use it. But it's going to $25. You can use it today. It's already purchased. Well, I'm going to give it 30 more seconds, and then we're going to do the first one. That's the number one prize.
Thomas is like, oh no, I'm on my phone, so he has no way of scanning.
Oh, no, you can do this right here, this QR code. Here, let me do the link. Let me drop the link on the
Jared.
In the chat. Can you do that, babe? Oh, no, you can't.
No, I.
Jared, that's cruel.
I know.
Tell Tommy he's lost. This is great, guys. We love the interaction. Thank you guys so much. Somebody's doing the Birdman hand rub.
Oh, okay. Here we go.
What Deal Maker is all about, guys. It's family.
Okay, so if you can do the QR code, I put the link on the chat. And then let's do this. Okay, let's go over the other prizes. That way, you'll give people time to to do that. So $25 gift card. The next one we have is going to be the Meraki Method ebook. This is a book written by Geraldine Soares, and she's the cutest and most adorable interior designer in the world, and she's amazing, and she breaks it down exactly what her process is in over 400 flips that we have done, and she's amazing. So we're gonna give that away.
That's a lot of years of trial and error, guys, all compressed in one ebook. Trust me.
That's at least 6 weeks worth of work. So if you want to check out the book, you can scan this QR code. The next prize is my book that's coming out April 23rd. It is called 48 Laws of Flipping. And if you want a copy, you can go here to pre-order, and I will give one away. Obviously, it's not going to be printed until April, but I will save it and I will give it to you once it is done. This book is going to be amazing. Not because I'm writing, but because it's a lot of blood, sweat, and tear. The next prize is going to be a $50 Amazon gift card delivered via email that you can use today. So it should be fun. I hope you win this one. It's a good one. And this is our last prize. This is Raw Deal Drop, which is my school community and platform that we are building. It's $47 a month. So this is a $470 value. I will give you 1 year free membership, and you get one case study, deep dive. I break one scenario from A to Z, look under the hood, go over everything, how we sourced it, how we funded, negotiating, how we disposed of it. So this will be the prize, and this is it. That's so what we got. I'm gonna give you maybe 2 more seconds to do this, and I've never done this before, so I might hit start and nothing happens, but we'll see. So this one is gonna be for the $25 gift card. And you, Rash, make sure you write down whoever won so we can take care of them after the meeting. Who will be the lucky winner?
Woo, let's go.
I hear a drum
This is
roll.
exciting.
Let's drum roll, guys.
This is exciting.
Gotta get yours to have a drum roll ready.
Who was it? Do we see it yet or no, babe?
No. Few winners. Oh, yeah. Mario Funes.
Mario.
All right. Congratulations, sir. Mario, why don't we bring you on real quick and you tell us 60 seconds. What do you do? Why are you here? Did you enjoy the call? Bring him on, Yuresh. Find Mario. If you're shy, it's okay. I'm shy too. I don't like talking.
Neither.
It's all right. You'll be all right.
Mario.
Got this, Mario. Come on.
So somebody make a note for me.
There you go.
Mario is the winner of the $25 gift card, so we'll take care of him. I will find your email and I'll send it over.
Can you hear me?
Yeah.
I can hear you. All right. Tell us a little bit about yourself. Big Tex, what should we ask him?
Mario, I got a question for you. So tell us your name, your business. Tell us what got you into business and who inspired you.
Give me 1 second. Let me get away
Make it
from
quick,
the-
Mario, because we're going to wrap it up by 8, and we got lots of prizes to give.
Yes, sir. So real quick, my name is Mario Funes. I own Unified Construction, and we've been in business for close to 10 years. And now I'm looking to get more into the real estate game. I was able to make it to you guys' meetings before, and I loved it. And honestly, it's been motivating me to learn more and get more into the game. Thank you, guys.
Awesome. Well, congratulations, Mario. Glad you're here. That's awesome, man. Okay, let's move on to the next prize, which is going to be the Meraki Method ebook. We're going to spin again. Babe, did you enter to win? Did I just see JJ here?
No, that's Joe. That's JJ.
Being number 2, Nakia White. All right, you Rash, find Nakia White and bring her online. She's the winner of the Meraki Method ebook, which is worth $1,000 if
Absolutely.
you were to ask me.
Absolutely.
So
Yeah, you here?
While we find Nakia, we're gonna spin again. This one is going to be for, which one is the next one? 48 Laws of Flipping. The author is extremely good looking, I hear. Just so you know.
I have him as Sexy Beast Wars in my.
Oh, Mr. Joe, my brother. I love this guy. Joe is the winner. You would have gotten it for free anyway, so it doesn't count. Okay, Nakia. Okay, Big Tex. Take it away.
Hi, Nakia. How are you?
Let's unmute her.
Hello?
Is there a way to unmute?
Urash, unmute Joe and unmute Nakia, please.
Joe? Nakia? Anyone?
Anyone going once?
Yeah,
going
I could
twice?
go. I could go. Yeah.
Okay.
So
How are you?
I'm doing good. Thank you so much for having me, guys. Thank you, Felipe, for extending the invite.
Absolutely.
So I am a data architect, platform engineer. I've been doing this for over a decade and a half, designing and scaling data platforms for different organizations. I've been in business in the past, got burned, and looking to get into real estate. So thank you, Felipe, and the entire community for having me. And such a great session. Really grateful that I was able to join.
Awesome, brother. I'm glad you're here. I've known you for years now, and I still don't know what you do because it's so complicated. I don't have an IT mind.
Well, I hope I can uncomplicate it by end up making it more complicated.
I had my digital thesaurus out. I was trying to look it up online at the same time.
Yeah.
Nice. Well, thank you for being here, brother. Love you, man. Take it easy.
Of course, I love you guys. Thank you so much. Yeah.
Did we get Nakia on yet?
Yeah, she's unmuted now.
I'm here. Can you guys hear me?
Absolutely, we can.
Okay, great. I'm Nakia. I'm from Pontiac, Michigan, but I live here in Georgia. I am a travel agent, and so I'm loving that. And I came on here tonight to get some information, basically. So I was here and I listened and I learned. So, did you guys have any questions for me?
No, we're glad you're here, Nakia. Thank you for being here. We appreciate you. Congrats.
Thank you. Thank you.
Thank you for tuning in.
You were
Thank you for inviting me.
Rocky Method. Yes, ma'am. Somebody make a note of that so I can follow up with her. Okay, the next one is going to be for the $50 gift card, Amazon. I hope I win this one. Let's see.
Silly, babe.
Pin number 4, Diane.
Diane.
You are the lucky winner.
The crowd goes crazy.
Unmute Diane real quick because we got to wrap up here in a few seconds, guys. If you got to go, it's 8 with respect to time. I'm going to wrap it up real quick. While somebody pulls her up, I am going to do the raw deal drop spin.
Mom, you're ready. Oh, she's ready.
All right.
Hey, we were cheating, hoping we were going to win.
That's it. You won.
Thank you guys so much.
Thank you, Diane, for being here. Thank you for tuning in.
I'll get with you and I'll send it over. Okay, Diane?
Okay, thank y'all.
Thank you. All right, and our last winner for the night is Miss Amber Jones. Congratulations. I hope you like to listen to me talk because that's what raw deal drop is. And you better like my accent, or if you don't, you better say you like it anyway. But Amber, if you want to come on real quick, just say hi and what you do. Tell us a little bit about yourself.
Hi, Amber.
It was like, we're on the countdown to core failure. And you're saying we don't want that?
Okay, we're running. Felipe, real quick, while we get Amber, do you want to tell them real quick? Oh, she here? Amber?
Yeah, she's unmuted.
Hire now and sponsor your job today.
Hi, Amber.
Hi, Amber.
Yeah.
Hi. Welcome.
Amber, what did I win? I didn't get it.
You won a 12-month membership for Raw Deal Drop. And after the call, I'll send you more details to kind of explain how it works. And then we kind of go over everything. But just tell us a little bit about yourself. Did you have a good time tonight? Did you get anything out of it? Was it good?
Yeah,
Tell us your thoughts.
I'm a real estate agent. Yeah, I'm into properties. I learned a lot tonight, although my little one wouldn't let me. So I was just on and off. But I thank God I learned a lot. Thank you.
Okay. All right.
Stayed on. Thank you for being
Sounds
here.
good. Thank you, Amber. All right. Well, let me move this thing along. I'm going to finish it in 2 minutes. Hang with me. We are going to skip the breakout room tonight. Next month, we are going to do breakout sessions in which it's 3 rooms, and we'll do some high-speed, rapid-fire networking. Following that, let's see, my Felipe's pro tip, we are going to skip that because we are out of time. And save the dates, 3rd Thursday of every month. We do virtual. We meet here. We'll keep getting better and better. This was our first one. Lots of tacky problems, but we'll get it down. If you guys have any suggestions, let us know how we can make this experience better for you. We are back in our quarterly meetups in person at the Augustos in McKinney. The first one is March 5th, so make sure you scan the code and make sure you are there. And let's see, if you are a real estate investor, let me recommend this 3-day event in Richmond, Virginia. It's the Big Daddy, Big Parrot Deal Maker by Jim Ingersoll. It is an amazing room to be in. It's super affordable. It's 3 days. It's going to be an unbelievable experience. They were just here in Dallas. I had the privilege to speak on stage and some incredible people. So if you want to attend, make sure you scan this. I and Geraldine will not be there this year because we'll be in New Zealand visiting my brother that just moved there. So I'm going to have to miss this. But if you can make it, be there. The next announcement we have is prayer requests. If you have a prayer request, we would be honored to hear about it. You can scan this QR code. Everything is 100% confidential and private. Geraldine and I will pray out loud, and we will come into agreement with you in whatever you are believing. We'll do this once a week at our church, Elevate Life. So make sure you fill that out. You would mean the world to us.
Yes.
And if you are a man, make sure you join our men's Bible study. If you're a local, we meet in Frisco Saturdays at 7 a.m. It's unbelievable. It's led by a former Navy SEAL, Garrett Uncleback, and he's amazing. We have over 400 people join. It is a powerful group. It will transform your life. If you are not local, not a problem. We do a live stream 7 a.m. in the morning. No recordings. You got to tune up and make sure you let your brother, your husband, your uncle, let any man know that this is pretty unbelievable. And let's see, these are our non-profits that we support. 2% of revenue that we bring through the Deal Maker, we donate to Uncle Neil's Home Foundation for pets, and 1% we give to Elevate Life Church Benevolence Fund called Operation Elevation. So anything you do through us, we give back. If you want to speak and present at any of our meetings, you are welcome to do so, as long as it's genuine, it's real, it's not a sales pitch. Share your experience. You can be virtual or you can be online. Scan that code. We'd love to have you. If you want to become a sponsor, we do a ton of things for a sponsor. Scan that code. We'll get your business in front of everybody and our distribution list, newsletters, and all that good stuff. I'm almost done, guys. 30 more seconds. We'll skip this one. The host this evening, Felipe, myself, and my beautiful wife, Big Tax, and Urash. I appreciate you guys very much. You did an incredible job.
Thank you, team.
Special thanks, Big Tax, Urash, and Geraldine. Thank you.
Thank you.
And let's see, thank you. You've been an amazing audience. And I mean that. And I knew it, so I pre-wrote it. And thank you for our sponsors. Please support them if you can. Scan that code and when and whenever you can, check them out. We have detailed explanations on everything they do on our website. And then the last thing is we'll have the room open until 8:15 if you want to hang around and hang out. And the sponsors, if they're still around, if you want to jump on a booth with them and answer questions or whatever. And I'll get an email out for Carson's information as well. But that's all I got for you. Thank you for hanging around. We went over 5 minutes. My apologies. Like I said, I think our time is our most precious asset, and I don't want to waste it, and I want to be very respectful of it. So next time we're going to end at 8 sharp. But that's it. Yeah, Big Tex and Geraldine, you guys got anything?
No, just thank you guys. God bless you, and let's just start the year strong. Yeah, this is our year, and everything we set into motion. I know that with God and having faith, we'll achieve anything we set our minds to. So yeah, let's go, guys. Thank you for being here, Big Tex, Uresh. Parting words.
Thank you guys. Stay prayed up. Stay powerful. Keep pushing.
Ooh, let's go.
Thank you, Big Tex. So everybody have a good night. We're going to get off video, but we're going to leave the room open until 8:15. Make sure you go to Dealmaker Corner and go to dealmakerdfw.com and check out all the resources. We love you. Thank you for being a part of this. We'll see you next month again, third Thursday of every month. I'll send you a reminder, and thank you for being here.
Thank you.